Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is your favorite show, Daily Calls, a show that answers all your stock-related queries on this program. Now remember, in case you're here for the first time, WhatsApp number is flashing on your screens. That's where you can send me all the queries that you have. Don't forget to mention your own name, location and your contact details so that we can also give you an opportunity to speak live to our top guests on the program. You can also log on to our YouTube channel on YouTube, Business Today, and go on to the Daily Calls live section. Go on to the comment section there, send me your questions. I'll be happy to take all of those up with our top guests. Already a lot of you are joining in early on the program, so let me just quickly welcome all of you who are joining in on our WhatsApp now. Ashok Kumar, Swati, Sagar, Saurabh, Vinay, Sunil, Shashi, warm welcome to all of you. Sanket, welcome to everybody, and we'll be taking all your questions with our top guests who will be joining in pretty soon. Let me quickly now, also see who all are joining in on our YouTube program as well. So let me just find out on our daily calls the newer people who are joining in on our YouTube with their questions. Kamlesh has already joined in. Hi Kamlesh. We already have a lot of questions that are coming in, so we'll be taking up all of that for you. But let me quickly first look at how the markets are trading. Near half-time trade, and of course we will get into those question and answers round very soon. Let's look at the markets. The Nifty is trading at 24,638, 0.08% higher. Remember, the going has been pretty choppy. Remember, it's also the last trading session of the week. Tomorrow being Independence Day, it's a market holiday, and we get into a 3-day long weekend, and therefore the sentiments are also, pretty choppy at this point in time. IT continues to be on the driving seat today. The sector is up by almost 1%. You have consumer durables, some banking moves that we are seeing, and of course some pharma index moves that we are seeing as well. But metals have slipped to the lowest radar on the top sectoral watch list. Real estate, oil and gas, look at even the broader markets, mid and small caps are seeing some bit of pressure in the markets right now. On the Nifty, you have top movers like Wipro, you also have Infosys, that's up by about 2%. You also have HDFC Life Insurance, Eternal, Dr. Reddy's. These are all the names that are hovering higher in trade. Let's look at the weakening stocks. Tata Steel, BEL, Adani Ports, Hindalco, Ultratech Cement. These are the top drags, down by over 1% kind of a move that we are seeing at this point in time. But what's doing very well is some of the stocks that are reacting to their numbers. Look at a Muthoot Finance, for instance, 10.5% higher. It's the top moving stock in the F&O basket right now. Manappuram Finance has also now started to move in tandem with Muthoot Finance from the gold finances after the stellar set of numbers that actually came in across the board. There was a big beat on the numbers front, beat profitability, revenues, margins, and even on the operational profit front as well. There are brokerage houses reports that are actually giving higher targets or upwards of 2,900 on Muthoot Finance post the earnings. You're also looking at Info Edge that's ticking higher, about 2.5–3% up in trade right now. Let me just also pull up, some of the stocks that are really hovering in the limelight as far as the Nifty 500 names are concerned. Anthem Biosciences, one of the recently listed stocks and the one that continued to give a lot of gains to all the investors, is higher by almost 7%. From the gold names, you have Senco Gold, that's higher. Remember, we are getting into a festive season, and the gold space stocks will also be a clear watch going forward from here. Let me also look at Neogen Software, that's up by nearly 8%. That's also hovering much higher in trade today. Let me also pull up a few more stocks. Swilect Energy is another one that's up by nearly 12.5%. Everest Kanto Cylinders, that's also an interesting one. That's also, up and about by 12–13% odd in trade. Let me also pull up stocks like, All-Time Plastics. That's the debut stock today. That's right now hovering around 8% higher in trade at 296 odd levels that we see. Automobile Global is another one that we are looking at this point. UFO Movies is another one. Remember, there are 2 new movies that have hit the street, and so the entertainment space is also in focus as well today. So PVR, and all those movie related stocks will also be in focus. Let me now welcome our guest on board. We have Ruchi Jain, Vice President and Head of Equity, Technical Research Wealth Management at Motilal Oswal Financial Services, joining in on the program with us. Warm welcome to you, Ruchit. Season's greetings for the upcoming Independence Day to you. You're dressed up to the T, and we can see the spirit right up there. So congratulations to you, to your entire team. Have a great weekend ahead and celebrate the spirit of freedom and independence. Help us understand your view on the markets right now.
Yeah, hi, very good afternoon, Sakshi. Thank you very much. And firstly, wish you or your team and all the viewers a very happy Independence Day.
Thank you.
Uh, yes, as far as market goes, I think yes, no, overall we have seen some consolidation in the markets in last three trading sessions. But if we no look at the positional structure, then I think last 1.5 months we have already seen some good price-wise correction from the recent swing highs. Now, participants are more focused on clarity from the global news fronts. We have a long weekend ahead, and very important the meeting which is lying there in this weekend between Trump and Putin. So I think no traders would wait or would like to watch the outcome of the meeting, which would definitely have a sentimental impact on the global markets as well as the Indian markets. So we believe that today we are going to see a continuation of the consolidation. No, and maybe next week we would see that momentum coming in, no, in the markets. But from the risk reward ratio perspective, if you see, then our markets have already seen a price wise correction in last 1.5 months. And if you look at this entire correction, this is not a downtrend. The way bigger corrective phase that we saw from October 24 to March 2025, there, that was a kind of a downtrend. But this correction is not a downtrend, but just a corrective phase within an uptrend. So usually whenever there are corrective phases and within an uptrend, such dips are good buying opportunities from a bit short to medium term perspective. So 24,200, 24,300 remains a very crucial support for the short term. And till the support is intact, we believe that the downside should be very limited from here on. And if everything goes well in the weekend, so we hope of a resumption of the uptrend in the markets very soon. So take this dip as a buying opportunity. But yes, you should be very selective in the stocks as of now. Let the market show sign of the resumption of the uptrend, then you can take change your stance to aggressive. But selective buying should be done at current levels in the market.
Okay, got that. I hope this has given an overall view to all our viewers when it comes to the markets. Richard, a lot of our viewers are joining in with their questions, so we'll straight away dive into those Q&A. Let's start off with our first question that we have. This is from Gul. She's from Kerala. She says, I have Imagica shares in my portfolio, 100 shares bought at 63.5, and now the price has gone down. I want to know if there is a fundamental reason for the price continuing to be dropping, or can I add more to the current levels as well that I have? Currently, the stock is hovering at around 59. What exactly would be the view that you'd like to share with Gul here, Ruchit?
So the overall trend for the stock seems negative, and one basic piece of advice that I'll give you: whenever you choose such stocks for buying for your portfolio, look at whether the stock is participating when the overall market is in uptrend. For example, we have last 2 or 3 years we have seen a significant uptrend in the market where no the broader markets have done quite well. But if you look at the Imagica, I think it made a top in the a year back in August 2024 around 100 rupees. Post August, we have seen a down move. Of course, the markets also corrected from October 24 to March. So, but the correction in this stock was much more than the average correction in the broader market. So that was first signs of underperformance. Secondly, if you look at the recent up move from the low of April to the highs of June end, we have seen the broader markets recovered quite well. But in that recovery, the stock has not participated at all. Means when the market is correcting, the stock is showing more correction than the market. And when the market is going up, it is not participating. So this is clear signs of underperformance. And usually you should avoid going long into such underperforming stock. So my advice would be to look for exit opportunities on pullback moves. Of course, it is a bit oversold. Previously, we had seen some pullback move coming in from that 56, 57 zone. So if you see any kind of pullback move again in the short term, take that as an opportunity to exit. There are many better opportunities in the market which you can bang on.
Okay, got that. Let's take another one. Akhilesh from Lucknow says, Hi Sakshi, how are you? I'm very well, Akhilesh. Thanks for asking. I hope the same for you. He says that I need some help with stocks and the future of the stocks that I'm holding for long term. One is Suzlon and the other one is SJVN. So these are two stocks from the renewable energy basket that he has in his portfolio. Suzlon he has at the rate of 64 and SJVN he has at the rate of 102. Now he wants to know what is the future of both these stocks. Suzlon has come off to 60 odd levels from his purchase level, and SJVN which he bought at 102 is also kind of sulking over the last couple of sessions and weeks. What exactly would your suggestion be?
We had seen a good trended up move in Suzlon, till a year back, around till September or August 2024. Post that, it has gone into some consolidation phase, but the good thing is that the long-term supports are still intact. The stock has managed to form a good support base around 45-50 level, and till that is intact, the price-wise downside should be limited and here on. And whenever the broader markets resume its uptrend, the stock has potential to do well. So I would recommend, since you are not a short-term trader and looking for more from a longer-term perspective, you can continue to hold your positions in Suzlon. SJVN look to exit on pullback moves because no, again, the same relative underperformance theory. If we look at SJVN along with the price up moves, the stock has not been a stock where we are witnessing outperformance when the markets are doing well. So I think SJVN in any kind of pullback moves, if you get it around 100 zone, you can look to lighten up your positions there.
Fair point. Let's take some other questions that we have already got. Again, from our WhatsApp that we have, this is Rajiv. He's from Noida. He says, can you please suggest good entry levels for a fresh entry in KFin Tech, from the current levels for about 3 to 4 years time frame. So he has a long time frame there. Within the capital market story, he's chosen the KFin Tech stock, which is seen as a registrar for a lot of companies when they come up for the IPO. A lot of back-end operations happen there. Any suggestion on KFin Tech right now? What is your thought?
So yes, if you're looking for next 2 to 3 years perspective, then I would suggest to divide your buying into some staggered manner. The stock has already seen a good time-wise as well as price-wise correction. I think it made a high of around 1460, 1470 in December 2024, and since then we have not seen any kind of trended up move coming in the stock. Now the major support, if I look at a bit mid to longer term charts, then that is coming somewhere around 950 to 1000 zone. So ideally, if you get the stock in that 950,000 range, then I believe that the risk reward ratio would be very much favorable to go long over there. But you never know. In case if the market resume the positive trend from here on, then maybe the stock can see an up move from current levels also. So I would suggest not to do partial buying over here. Whatever your quantity that you want to buy, maybe 30 to 40%, 30% of the quantity you can buy at current levels, and wait for further signals whether the stock resume its uptrend from here. And in case if not, and if you get any buying in that range of 1000 to 50, then those would be good levels to put the rest of your money, so that you can get a good average price, and for next 3 years you can take benefit of that.
Okay, got that. Let's take another one. This one is from one of our viewers, Momita from Kolkata. Hi, Momita. She says, I have Vatek Wabag in my portfolio. I bought this stock at 1590 levels and I want to know what is the outlook for the next 6 months. The second one I want to know is Som Distilleries that I bought at 153 odd levels. Again, the holding period here will be 6 months. Vatek Wabag is at the day's high level today at 1566. So it's nearing to your purchase price right now, Momita, because your purchase price is 1590. Let's see what happens here. And on Som Distillery, you have bought it at 153 for a holding period of 6 months. Let's understand from Rujit what is the idea on both these stocks.
So Vatek Wabag, if she can keep a bit a midterm perspective, maybe 6 months or more, if she can hold, then I think it's better to hold on the stock. Of late, the stock has consolidated in that range of 1675, which has been the resistance, and 1450, 1430, which has been the support. But the good thing is that this entire correction just seems to be a time-wise correction within an uptrend, and the stock has not even breached its 2200-day EMA in this recent correction. So I think till the stock is keeping that 1400, 1450 zone intact, you should not worry much about this. Keep some horizon of at least 6 months and continue to hold on the stock. Once the stock surpasses 1675, then you should get a renewed rally in the stock. home distilleries, I think the short-term momentum seems to be negative, but 135, 132 is a good support for the stock if I look from a bit mid-term perspective. So these are not the levels where I would recommend to exit from the stock. For now, can hold on. Maybe around 135, 134, you should review. If there is any reversal patterns getting formed there, then those could be the levels where you can even look to add more positions. But as of now, just hold your existing positions, and when the stock comes around 134, 135, just take a review on this again.
Okay, got that. Let me take some more questions coming in. And this one is from one of our viewers, and this is again from our WhatsApp that we are getting. Sanket Vakisia from Surat. He wants to know about stock which is very, very low priced, I believe. This is SR India that he wants to know. Let me just quickly look at the share price. It's at 19 rupees right now, and it's a very low liquidity kind of a stock, very low price stock. In the year to date basis, the stock has gone up to 100% odd from just about 6 rupee onwards when we saw on 1st of Jan to all the way up to now 19 odd levels. Okay. So the question is that I have bought this stock at 7 rupees, 1000 quantity. What should I do? Hold or sell? Well, Ruchit, we have discussed in the past as well when people get attracted to lower price stocks. This is one a more example of the same. SR India. Of course, here the good part is that our viewer is actually sitting on profits. But again, what is the advice that you would want to share here?
So frankly, in such stocks, neither technical analysis works, not nor fundamental analysis works. So it's I would recommend not to take any view of from any research analyst on such stocks where the liquidity is low, the stock moves circuit to circuit. Maybe you can consider yourself one of the lucky person who is getting gains, such kind of gains, even this penny stocks. So analysis cannot be done in such stocks. I think it's better to manage the stocks from a risk management perspective, that it should not be a big part of your portfolio, and whatever positions are there, you should be in a comfortable position that in case if the stock starts correcting from current levels also, then you won't no, these positions won't go into much losses. So I think maybe partial profit booking and holding partial positions with some revised stop loss method should be the best strategy to ride the trend since you are in profits. But otherwise, since the liquidity is very less, doing any analysis on the stock is just not possible.
Sure. Okay, let's take the next one then. This one is from Tanmay. He says, Happy Independence Day, Sakshi. Thank you so much, Tanmay, for the wishes. I wish you and your loved ones the same. The question is on SW Solar, Sterling and Wilson Solar. He wants to take a fresh entry into this stock for a short period of time and wants to know what is the level at which he should look for an entry and what's the target that you can also advise for him, Rujit.
Yes, so we have seen a fair bit of underperformance in the stock. The stock has not participated much in the recent up move as well. But major support for the stock, if I look technically, then it is somewhere in the range of 220 to 240 zone. So wait for some declines, maybe towards 240 to 20 range. Those could be good levels where the risk reward ratio could become favorable. Your stop loss should then be below 210, and on pullback moves, you can expect levels again around 320 to 330.
Okay, got that. I hope this has also given you, some kind of understanding as to how to go about it. Let me just take another question from our WhatsApp and then we'll switch over to our YouTube questions that are coming in as well from our viewers. Okay, so this question that we have is from one of our viewers, Swati from Jalandhar. She says, I want to know about Ambuja Cement. I bought this at 530. Should I hold or book my profit?
I would recommend to hold on the current your existing positions. Overall, we have seen that certain cement stocks have done really well in last one quarter. Whether you see stocks such as Ultratech within the large cap space, Grasim has been doing well. Many of the mid cap cement space, such as the Ramco is there, Star Cement is there, have seen a good price volume action. So I think cement as a space, as a sector, we believe that a gradual up move can be expected going ahead. And within that, if you look at Ultratech Cement, Ambuja Cement, then the downside seems to be very limited from here on. The stock has good support around 550, 560 zone where the 200 DMA for the stock is. So I think downside would be limited from here on. And as the market resumes uptrend going ahead, you should see Ambuja Cement also participating over here. So downside seems to be limited. So I would recommend to continue to hold on the positions.
Okay, got that. Let's take some questions from our YouTube viewers then now. Kamlesh Narkeri writes in says, Hi Sakshi, नमस्कार नमस्कार आपको भी कमलेश जी HBL पावर के ऊपर पूछना चाहते हैं 200 शेयर्स हैं 63 के भाव पर लॉन्ग टर्म के लिए निवेशित रहना चाहते हैं क्या करें
So
HBL पावर
yeah, can hold on at current levels. I think overall we have seen the stock showing some sense of consolidation, but the major support for the stock is still intact. So keep some monetary stop loss in the stock, I would recommend, and continue to hold the existing positions for now.
Okay, taking the next one. This one is from Anuj Singh. Anuj Singh says, Good afternoon, ma'am. Good afternoon to you, Anuj. Zomato के शेयर है इनके पास 258 के रेट पर 500 शेयर लिए हुए हैं लगभग 23% का प्रॉफिट हो रहा है बधाई हो आपको अनुज जी प्रॉफिट्स को लेकर अब पूछना चाह रहे हैं बने रहें या फिर निकल जाए प्रॉफिट लेकर इटर्नल के ऊपर क्या कहना चाहेंगे
मेरी सलाह रहेगी कि बने रहे बिकॉज ओवरऑल हमने देखा है कि गिरते हुए मार्केट में लास्ट एक महीने में ये स्टॉक में कुछ इतने प्राइस वाइज करेक्शंस नहीं हुए जो स्ट्रेंथ के काफी अच्छे साइंस है जहाँ पे हम मार्केट में ऑल टाइम हाई से भी करेक्टिव फेज देखा है ये स्टॉक अपने ऑल टाइम हाई के पास ट्रेड कर रहे हैं तो क्लियर आउट परफॉर्मेंस है और इनफैक्ट सिर्फ इटर्नल ही नहीं अगर आप देखेंगे इटर्नल है पेटीएम है नाइका है डिलीवरी है ये जो न्यू एज टेक्नोलॉजी स्टॉक्स है आई थिंक उनमें मोमेंटम अभी भी काफी स्ट्रॉन्ग है सो मेरे हिसाब से क्योंकि करेक्टिव फेज के मार्केट में एक अच्छा आउट परफॉर्मेंस इटर्नल ने बताया है तो क्लियर बाइंग इंटरेस्ट इस स्टॉक में दिख रहा है सो आप अपनी पोजीशंस को अभी भी होल्ड करें और ये प्रॉफिट को राइड करें
Okay, got that. Let's take the next one. This one is from Arihant Yogi. He says, I'm a very big fan of Rujit sir. Sir, cement space से कोई एक शेयर बताइए और अंबुजा सीमेंट पर भी बताइए 530 पर लिया हुआ है क्या करूं ऑलरेडी अंबुजा सीमेंट पे एक राय दे चुके हैं रुचित जी बट क्योंकि आपके बड़े फैन हैं अरिहंत क्या कहना चाहेंगे इनको सीमेंट क्षेत्र के ऊपर
थैंक यू अरियन जी सो आई थिंक अंबुजा सीमेंट पे तो मैंने जस्ट अभी कहा कि होल्ड करना चाहिए अगर आप कंपैरेटिवली देखेंगे तो यहाँ पे डाउनसाइड काफी लिमिटेड लग रहा है करंट लेवल से सो ये एक स्टॉक है जो आप होल्ड कर सकते हैं बाकी अगर लार्ज कैप स्पेस में अगर देखते हैं तो ग्रासिम के स्ट्रक्चर्स अच्छे लग रहे हैं कि जहाँ पे हमने एक कंसोलिडेशन भी देखा है स्टॉक में कुछ ज्यादा बड़ी गिरावट भी वहाँ पे नहीं आ रही है आई थिंक ग्रासिम रहेगा जहाँ पे लार्ज कैप स्टॉक्स में आप अगर फ्रेश बाइंग करना चाहते हैं थोड़ा मिड टू लॉन्ग टर्म के लिए कर सकते हैं और अपने अंबुजा सीमेंट के पोजीशंस को होल्ड करने की सलाह रहेगी
ठीक है let's take another one and this one is from Sheetal Agarwal she says hi Sakshi hi Sheetal the question is on Jindal Saw she has already purchased this stock in her portfolio bought at 255 levels hold करें या sell कर दें ये जानना चाह रहे हैं आपसे
Overall trend for the stock is negative. Whatever pullback moves we are witnessing, clear selling pressure is seen at higher levels. So I think that underperformance could continue. It's just that the stock has already seen a fair bit of correction and the momentum readings are oversold. So you can wait for some pullback moves to take an exit a bit higher levels rather than at current levels. So sell on rise should be the strategy. 210 followed by 220. So 210 to 220 range you can expect it to act as a resistance on any pullback move. So if you get any pullback within this range, then you can exit from the stock at those levels and switch to some other better names.
Okay, let's take the next one. This is Aarti Jain. She says, Hi Ruchit sir, I have 1600 shares of Ashok Leyland priced at 120. I want to know what exactly are the future targets that I can expect to get on Ashok Leyland.
So I think this is just no trading around your cost price. No, if you have bought it, no post the X bonus which we have seen recently, and if your buying is before that, then definitely you are sitting in very good profits. But overall structures is much positive for Ashok Leyland. In fact, no the entire auto space we are expecting no the stocks to show a good rebound going ahead in next few months. Auto as a sector has seen a decent consolidation over last no 7 to 8 months, and there are many stocks which are showing signs of a breakout within the auto and auto ancillary basket. So Ashok Leyland also 114 is a very good support for the stock technically. Till this is in fact, you can again expect an up move towards 132 to 134 at least in the near term. And when the stock comes around those levels around 134, you can take a review on those. At current levels, I would suggest to continue to holding the stock.
Okay, got that. I hope this has also answered your question. Let's take the next one. We have a lot of questions also coming in on our WhatsApp group again. So let's start to take some questions from there too. We have this question now coming in from one of our viewers, Sunil Belwal. He says, सर सीक्वेंट साइंटिफिक खरीदा है 188 पर 200 शेयर्स यहाँ पर हैं एक शॉर्ट टर्म आउटलुक आपसे जानना है सीक्वेंट साइंटिफिक पर
सीक्वेंट साइंटिफिक तो मोरलेस फिलहाल तो स्टॉक अपने सपोर्ट के आसपास ट्रेड कर रहा है 166 स्टॉक के लिए एक सपोर्ट अच्छा है जो इसके 200 डीएमए के आसपास अगर आप पिछले 10 दिन में देखेंगे तो स्टॉक हाई लेवल से करेक्ट हुआ मार्केट के साथ साथ बट 165 166 सपोर्ट ब्रेक नहीं हो रहा है सो जब तक 165 166 इंटैक्ट है तब तक स्टॉक खराब नहीं है आई वुड से तो होल्ड ऑन योर एग्जिस्टिंग पोजीशंस लेकिन हाँ 165 का स्टॉप लॉसेस जरूर रखें क्योंकि अगर वो ब्रेक होता है तो टेक्निकल स्ट्रक्चर्स खराब हो जाएंगे सो कीप अ स्टॉप लॉस बिलो 165 एंड कंटिन्यू टू होल्ड योर लॉन्ग पोजीशंस
Fair point. I hope this has answered your question well and you'll be able to follow the guidance there. Let me take the next one then. This one is again from one of our viewers on our WhatsApp again that we have. This is Arup Das. He's from Durgapur. He's a senior citizen. One, he has a question on Vimta Labs that he has bought at 559. The other one that he has is Steel Exchange. About 10,000 shares bought at 10 rupees 70 paisa. That's another one that he has. Let's start off with Vimta Labs first, where he bought it at 559. He's sitting on profit. So let's find out whether it makes sense for him to hold on or to book his profit out.
So, sir, I won't be able to comment anything on Steel Exchange. I have not tracked the stock, and since it's a penny stock, I do not track this. But yes, Vimta Labs, I can recommend to hold on your existing positions. The overall structures is very strong. In fact, if you look at last 1 month in July, we have seen very good price, price up move supported by very high volumes in the stock, which clearly indicates a good buying interest in the stock. So 600, 590 is a good support base. Still, this is intact. You can even expect levels around 750 to 780 kind of range. So hold on your existing positions in Vimta Lab. I think this should do well in the short term.
Okay, and on Steel Exchange, I guess does not cover the stock. It's a penny stock as it is. So Arupji, since you're a senior citizen, would clearly advise you to be very careful when you invest your money in such penny stocks there. Please do seek a fundamental and a financial expert's advice and only then experiment with such stocks in your portfolio. At this point in time, you also need to be very careful with what you invest in of your money. Let's look at some other questions that are coming in then. We have this one coming in from again one of our viewers from our WhatsApp group. This is Shashi. Shashi says, good afternoon to you. What the question is on is Nelco. The question is that I have 400 shares purchased at 1110 odd levels. I want to know how long will I really need to wait for a recovery to take place on Nelco. How would you advise on this one? Ruchit.
A bit high beta name. We usually see that the moves are very fast in this name. Recently, it did rally from 750 to 1150. But again, I know this correction clearly indicates that no, the up moves are not showing any signs of sustainable moves. So again, getting to your cost price as of now, technically, it doesn't seem that we would see that at least in the short term. But 940, 950 is where the immediate resistance is. So wait for some pullback towards 940, 950. Take a review again whenever the stock comes around 950, depending upon how the price volume actions is when during pullback moves, you can then decide whether to exit over there and book losses or continue to hold on. So wait for some pullback towards 950 and take a review again over there.
Okay, let's take the next one. This one is from Vinod Chaudhary. Says, hi Sakshi, happy advance Independence Day to you as well. Vinod, thank you for writing in. The question is on Indraprastha Medical, and the question is, I need multiple entry levels on this share. How would you advise him?
So as far as major support levels goes for the stock, 420 to 425 is the major support technically in this stock. So I think that should be good levels in case if you want to buy go long at those levels. And if the stock corrects further, then major support next support would come around 370 to 380 zone. So these are the support levels where overall if you see any kind of correction towards the support, then you can look to buy at those levels.
Okay, let me just ask you another question that one of our viewers has asked. This is from our YouTube again. This is on one of the recently listed stocks, so the historical charts will be limited. Office Space Solutions from the co-working space. The question is on, should I really look at this stock as a fresh buy?
I would suggest keep on your watch list. The stock post listing has not shown any signs of no high volumes along with the price up move. So there are no signs of any kind of uptrend, at least starting at current levels. 540, 530, no, the recent swing lows are a good support for the stock. In case in the near future, if we start witnessing any kind of reversals, say, signs or price up move supported by good volumes, then you can consider adding it to your portfolio. So good stock to keep on the watch list, but buy signals are not still there at current levels.
Okay, got that. I hope this has also helped you out. Next, we have this question from Ankur Modi. He says, Ruchit sir, can you please give me a view on Ask Automotive for long term? How is this stock on charts and what is the future outlook?
So the longer term structure is positive for Ask Automotive. A good high top, high bottom structure has been formed. The price of moves was supported by good volumes, whereas on correction, we have not seen any kind of volume-based selling. The stock is also trading around its support zone right now, around 440, 460 is a good support zone for the stock. So I think if the stock is able to manage, able to take support over here, then we should see a resumption of the uptrend at least towards the previous swing highs of 540, 550 kind of range. So hold on existing positions. If you want to go fresh long, I think with the stop loss below 440, you can create fresh longs as well.
Okay, got that. Let's take the next one then. This one is from one of our viewers again. He says, I'm a big fan of Ruchit sir. Your name has not been mentioned, so I cannot share that with Ruchit. He would love to know who is he getting connected with. Please do share your name. The question is on PPL Pharma for a fresh entry level. Would you suggest PPL Pharma for a fresh entry?
Thank you very much. But yes, PPL Pharma, I think this is one stock which comes with a bit of high risk. So depending on how much risk you take, if you are a risk lover where you take high risk, high return type of trades, then you can create longs in this range of 190 to 180, which are the previous swing lows. Last time in February 2025 also, the stocks took support around 180 and showed a bounce back move. But as I said, this is one stock where you can expect high volatility. So create fresh longs, but keep stop loss below 170. Right. So if 170 gets breached, then just exit the positions because the structure would negate that. So you can look to buy in this range of 190 to 180, keeping a stop loss below 170.
Keep strict stop losses in place. Satyanarayan Rao Kulkarni writes in, good afternoon, I am holding Deepak Nitrate in my portfolio, sitting at a 10 to 20% kind of a loss. Shall I hold on continuously for a turnaround in the sector or shall I exit right now? Deepak Nitrate, how would you say?
So I think the stock had good momentum till August 2024, but in
Yeah.
last 1 year, what we have seen that the stock has just seen very sharp correction from that highs of around
Yeah.
3,031 the high which it made. So considering that a significant underperformance has been there in this last 1 year, I think no one should avoid expecting any kind of turnaround or a major up move from here on. So yes, 1750 is a good support for the stock to see since the previous swing lows are there. So you can expect a pullback move, but not an outperformance, right? So usually go with the stocks which can see an outperformance if the entire chemical space shows any kind of up move from here on. So Deepak Nitrate won't fit that list where outperformance should be expected. If you have existing positions, these are not the levels to exit. Wait for some pullback moves. But if you're looking to see and if you're looking for any fresh buying interest, if you're looking, then I think it should be avoided.
Okay. Aranya Das from West Bengal writes in, says, hi Sakshi, happy Independence Day in advance to you as well. Aranya, thank you for writing in. Wants to know, I want to take a fresh entry in LG Equipments, whether that is advisable, and also a fresh entry in Honasa Consumer. So either of these two, what would be the clear advice of Ruchit sir? For sure, we'll get you your advice there. LG Equipments had been in momentum, I think did slip quite a bit in the last few sessions. also substantially. And Honasa Consumer has come back after the Q1 numbers substantially in focus. It's risen as well. Let's find out for both these because these are completely from different sectors altogether. Ruchit, LG Equipments and Honasa Consumer. Fresh entry.
So LG equipments, I would recommend to avoid taking any fresh entry over here. Overall, we have seen the recent pullback move was there towards 600, but it is not sustainable at higher levels. And major support is too far from current levels, which is around 400, 430 kind of range. So from a risk reward ratio perspective, does not seem the stop loss will be very big even if I look at the previous swing lows. So I would recommend to avoid LG equipments for now. Honasa, yes, the stock has already seen a good price-wise correction overall and have shown signs of a pullback move. But if I do some comparative analysis, then I would suggest going long on Nykaa rather than Honasa at current levels. No, of course, not apple to apple comparison, but within as we have discussed that the new age listed stocks, there are certain stocks which are showing a good outperformance. And recently, I think we saw the numbers of Nykaa were also good. So Nykaa can be preferred if you are looking to take a fresh investment.
Okay, let's take the next one. This one is from Karthik. He's from Bangalore. He says, I want to buy CAMs for my portfolio. What would you suggest? Now, within the capital market stories, these all stocks have actually been a great, stocks to hold in the past. They've given handsome returns to investors as well. After the recent consolidation, what exactly is your thought process on CAMs? Can one still go ahead with it?
So many of the capital market segment had done quite well when our markets bottomed in March or April 2023. From April 2023 till September, October 2024, in that rally, there was huge outperformance from these capital market stocks. But since then, we have seen a good corrective phase in this stock. So the overall longer term story, I think, remains intact for the capital market segment. Certain stocks should continue definitely do well, but there are no signs of any short term outperformance coming in from this theme. So if you're looking from a bit mid to long term perspective, then you can buy it in a staggered manner where at current levels you can look to buy some quantity, but keep some room that in case if you can get some dip towards 3400, 35 kind of range, you can add more at current levels. But as I said, do not have a very short term view on the stock, but rather have at least I would suggest at least 9 months to 12 months of time frame, so that if the capital market segment shows any kind of renewed buying interest, then these stocks can do well.
Okay. Ruchit, we have this one last question. This is from Rahul. He says, Hi Sakshi, can you please suggest on United Spirits? I'm holding the stock at a level of 1410. So, should I hold on or should I exit some in profits as well? What would your advice be from the liquor space, United Spirits? The earnings also came in, and after that, we've seen 1.5% uptick today.
So hold on at current levels because these are not the levels where you should look to exit. Stock has already corrected from the recent high of 1620, 1630 to 1320. And 1250, 1300 is a good support zone for the stock if you look at previous swing lows. So hold for a pullback move. Now the 200 DMA for the stock is around 1410, exactly the buying price which was there. So let it come to a cost price at least. Then you can take a review again and decide whether to exit there or continue holding for a bit more longer period. But these are not the levels where I would suggest to book any losses or exit. So hold for a pullback towards your cost price at least.
Okay. In the end, Ruchit, before we let you go, because it's Independence Day and, the theme that we always, talk about is financial freedom, I have to ask you on, your top choice of stocks that you would like to highlight for all our viewers for having a financially free future. How would you advise any key stock ideas for the same?
So Sakshi, financial freedom is something which you get in a long term and not
Yes.
just very short term trading strategy. So investors would clearly should have that in mind.
Yeah.
So I think yes, you should invest at regular intervals whenever markets go. So one strategy that I would suggest which can work well is to look for buying on corrections whenever markets see any sharp fall, any sharp corrections. Rather than getting panicked around those times, look for buying opportunities and corrections. So I think that will help you to give an edge or alpha when the markets rallies. So that is one thing that you should always watch out for. And as far as stock recommendations are concerned, one stock that I would recommend going long over here that can do well in mid to long term is Indian hotels. So overall, we had seen a good rally in Indian hotels from March 23 to October 24. Since last 7 months, we have seen some good correction in the stock. It is more of a time-wise correction rather than price-wise correction. But
Yeah.
the risk-reward ratio is very much favorable at current levels since the prices have already corrected. The stock is sitting around its support level. So downside seems to be very limited from here on. As the stock resume its uptrend, we should see good returns coming in the stock. So the risk-reward ratio is favorable at current levels. So Indian hotels at current levels should be bought. You can keep a stop loss below 720 on your existing positions and at least expect a towards 840, 850 kind of levels.
Okay, fair point. Well, Richard, thank you so much for being with us on the program and highlighting for all our viewers such wonderful insights, and of course helping a lot of our viewers by resolving their queries as well when it comes to stock portfolios. Again, wishing you a very happy Independence Day in advance and hope you have a great time. And of course, greetings for Janmashtami as well. We'll see you soon in the next week.
Thank you, Sakshi. Thank you very much.
All right, viewers, we'll wrap it up on that note on this edition of Daily Calls, but continue to stay tuned in as on Business Today Television, we continue to get you the market views and market coverage across the board. Closing edition will be at 3 p.m. I'll see you.
The countdown to India at 100 begins. Business Today's landmark special issue is here.